Well, with no financial news from the government, what the heck is the Federal Reserve going to do at the next meeting if they don't have any of this information? Well, they might have this information. So what I'm going to try to explain to you guys today or help you understand is we did get two pieces of the puzzle in regards to the unemployment numbers and inflation, and how I'm going to teach you guys today to be your own economists and how to take that data and figure out what in the heck's going to go on with these and the whys behind it. So folks, my name is Dan Frio. I do this report each day to inform you guys what's going on with these and the whys behind it. So without further ado, let's get to today's news. So right through here, here's what we're focusing in on. The Federal Reserve, they monitor these things to control this thing over here. So what do they look at? Well, they look at inflation, they look at the unemployment rate, they also look at the GDP, and they control this rate right through here, the federal funds rate, which is currently at 4 to 4.25. Remember that because it's going to be important as we move through this. So here's what we got yesterday. We got this report, and I put it in last night's closing bell, and it says asking rents mostly unchanged year over year. Well, the good news about this is this number through here equates out to 40%. 40% of the inflation numbers. So what we're seeing right now is actually the rent actually coming down. So asking rents growth is negative 0.8 year over year. So when this data finally comes through the system and gets to where the data the Federal Reserve monitors, they're going to see the inflation numbers on the housing piece of this actually plummeting. That could push the inflation rates all the way back to exactly where the federal funds or the Federal Reserve wants them. But the unknown behind this is, remember, we got those tariffs still in the background. We haven't heard about those in the last couple of days because of the government shutdown, but we also still have tariffs in the background. That's what's causing a little uproar about this. But if you take out that, or if we're starting to see that tariffs aren't as big of an impact, you're going to see the inflation numbers drop just because of this housing number. That's number one. And we got that report yesterday, and you didn't really hear many people talk about that. Now, another piece of the puzzle is right through here. The shutdown meant no jobs reports. Well, we got Carlisle, who is a data analysis company, and they came out and said this would have been much worse if the jobs report actually came in. How bad? Well, based on this report, they're saying, well, we normally need to keep about 25,000 jobs to keep the jobs market flat. Well, they're saying this report would have came in at 17,000, meaning a deterioration, a pretty big deterioration in the employment numbers. So let's go back over to these numbers. So let's break it down. We have unemployment numbers, or the jobs reports that's coming in every week bad. Okay, that's the easiest way to say it. Then when you get to the inflation piece, this is the piece that's a little bit sticky because we're waiting for those tariffs to pop this thing up, and it never really did. Remember when this came out, like at the beginning of the year, say in March, the inflation rate was 2.4. Now we got all the tariffs. Remember they said this was going to skyrocket? Well, now we're at 2.7. So even if there's more tariffs to come built into the system, you're going to see this number come down because of the housing data. Okay, so check out this report right through here, and it's at right through here, calculated risk. If you haven't signed up for his newsletter, I would suggest you do because he gives a lot of content that you can use. So that's the two pieces of the puzzle that we got. So then let's go over to the stock market, the indices. How are they faring for today? Well, if you go across the board, we have these things hitting a record high again. We got oil down at $61 a barrel. That is fantastic. We even have the 10-year Treasury dropping a little bit right now. So if I'm looking across the board with this as an investor, I'm like, I am all in. This is fantastic news. Let's get over to crypto just for kicks, 124. That's just off of its record high. So if you go across the board through all these indices, it's basically saying, okay, the markets are okay right now based on a lot of this data. Let's go up at the top and see what the headlines are looking like, but next year doesn't look so good. Let's just hold on for a second to see what this headline has to tell us before we move on to what the bond market's doing right now. Let's see if there's something we're missing here. WTO hikes global trade forecast for 2025, but next year doesn't look so good. So we're going to see how that pans out. But let's just go over to the bond market and see how the bond market's reacting today. So we're not going to get really much in the way of financial news today. We will have several Federal Reserve officials talking today. That can move the markets. But right now the markets are -2. What I want to show you here, this is basically the mortgage bond Because if you're new to my channel, this is what we focus in on each day. We focus in on the mortgage bond when we're trying to figure out mortgage rates, right? Why would you look at the 10-year Treasury? Well, you look at the 10-year Treasury if you don't have access to my channel or the MBS market. But if you have access to the MBS market, which is a mortgage bond, okay, then check out the mortgage bond. So here's what we follow on my channel. We follow the mortgage bond. How do you decipher this? Well, if this price of the bond's going down, we'll take that direction right now. If the price of the bond's going down, that means rates are going up. Okay, so that's not good news when it comes to here. But the good news, or let's say some good news, we're basically right where we were when the month started. This is when the government shut down. So here's when the government shut down. The bond yield was right here. You go across, where are we today? We're exactly right there. Okay, so you had a little bit of reprieve after, and then it's down, 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 meaning mortgage rates are up, 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 and away. So you can see through here, a lot of the banks, when you see these bubbles through here, that means a lot of the banks were adjusting their rates. In most cases, they were better, meaning they got better rates. Then you start seeing the deterioration, and not a lot of banks actually lowered their rates or raised their rates in a worse way. So that actually gives us good direction, where a lot of the banks are feeling like this little drop in bond yields is going to be short-lived. So they're expecting mortgage rates to kind of come down a little bit further from where they are today and kind of just stay sticky right through there. And that's what I'm predicting. I'm predicting the market being 6.25 to 6.5 throughout the next duration, even through the Q4 of this year, until a lot of the other stuff settles. We have a government shutdown. Let's see how that kicks back in. We have tariffs still coming down the pike. Let's see how that brings in. Once we get some of the financial data, let's see how the jobs market's coming in. But until that time, we're going to take the pieces of the puzzle that we get, the little pieces of the puzzle we get from the markets, and try to extrapolate that into the Federal Reserve's news or what they're expected to do, and then how those relate to these over through here. So hopefully that makes a little bit of sense for you. Let's get over to the economic calendar for today and see what's there. We really have nothing here. We go down through here, we're not going to get any financial news from the government, but we do have Fed official Bostic speaking. We had Fed official Bowman speaking. We go down through here, we have Fed official Kashkarian speaking. So here's a whole bunch of Fed officials talking today. Are we going to get the Atlanta Fed GDP? No, because they're shut down as well. So we're not going to get much in the way of financial data. That's why you need to take every little piece of puzzle that we can find from the markets to extrapolate that to try to figure out what that's going to do with these over through here. So hopefully you understood a little bit of what's taking place in today's market. We have a government shutdown. We have the unemployment rates and all these things in the background to focus in on. But so far, here's what we're looking at. We're looking at the inflation numbers that might be cooling a little bit because of the housing number. We got a jobs report that actually is doing pretty darn bad. So what that means in my terms, let me know what you think down below. But here's what I'm saying. I'm going to say this is good news for the Federal Reserve, because the Federal Reserves, they're freaking out right now because they're like, we don't know what tariffs are going to do to inflation. Well, so far, it hasn't done all that much. Then they came out and said their whole thing now is based on the jobs report. Well, a jobs report or a pre-jobs report that came in today right through this article right here paints a pretty dismal picture on the jobs report. So I'm saying mortgage rates are going to stay steady right where they are right now until we get really government numbers to validate a lot of this information. Then once it does, I think the markets will react to that. But I think the markets are already going to be reacting to some of this data cooked into the puzzle. And as the markets realize this as well as we realized, you're going to see the markets kind of working their ways off of this. So what my expectations are right now is the mortgage rates aren't really going to move until we get a catalyst one way or another. Now, the government shutdown might be on its final stages, because now it looks like President Trump's willing to negotiate a little bit on these the Medicare and Medicaid and all these insurance things. And I looked into it, and I would say, President Trump, please sit down at the table and try to work something out with this, because this insurance piece of the puzzle is a sticky point. And even I have family members that use the exchange, and their premiums would go up quite a bit. So that it would help a lot of people if we do some kind of settlements on the insurance piece of the puzzle, but we'll see how that all pans out. We're going to focus in on the jobs reports and the inflation numbers at this time. So if you want to check out a lot of this details on a daily basis, I do post a blog each day with a newsletter, kind of like today. Here's what we allow. You be the economist while the government is shut down. We go through articles through here. And then I'm also going to start highlighting. If you don't know, I was on News Nation a couple months ago, and I've been in a couple articles in Yahoo Finance. So I've been in some of the mainstream media medias, websites, and on TV. So check out my appearances right through here. I'm not just an average Joe Blow mortgage guy. I've been doing this for over 35 years, and I'd love to be able to work with you. So here's what I do, folks, for a living. My name is Dan Frio. Like I said, I'm a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. The cool thing about us is I work at a bank, and we have a slogan. It's this: one application, one credit pool. We're going to compare your loan to over 30 different lenders. Now, how do we do that? Well, what's your goal when you're out there trying to buy or refinance? You're going to call all these mortgage companies. What are you looking for? Your first question is, what's your rate and what's your fees? Okay, so what we've done is we partnered with over 30 different lenders to assure when you're calling us, we're going to get you quotes from over 30 different lenders. So if you can beat 30 different lenders' quotes, God bless you. But if you want some help navigating basically from application to keys in your hands, or maybe navigating from a refinance, your mortgage statement, to a little bit lower payments to save or put a little bit more money back in your pockets, we can help you with both those. If you're looking to buy, please check out this video right through here. This will give you up to $7,000 in down payment assistance that you don't have to pay back. It's not a payment. It's not a lien on your property. So if you go to refinance down the road when rates come down, you don't have to worry about paying that off because it was basically free money. If you're looking to refinance and you're like, Dan, I don't know when to refinance, I keep missing it, do me a favor. Use the Rate Watch 2.0, a brand new tool we just created. So if you're signed up for Rate Watch 1, please sign up for this thing. This thing is on Rate Watch on steroids. What it does is you're going to put in your information about your mortgage, basically what your mortgage is, what the rate is, what the balance is, and all that other stuff. We don't sell the data. What I'm going to do is I'm going to monitor it for you personally. So when rates hit exactly where you're looking to refinance, what I'm going to do is I'm going to reach out to you. So don't be surprised if I reach out to you, give you a call, text, or an email saying, hey, guess what? Your rate watch just triggered. Let's go over what your savings is going to be. Let's go over what your cost is going to be and what your break-even point is going to be. If it makes sense, we'll get the paperwork started and lock you in. If it doesn't, we'll just lower your rate on the Rate Watch tool and reach out to you at that time. So if you're looking to buy or refinance, folks, we'd love to help you. Just go to therateupdate.com. But today I'm looking for rates just to be stagnant until we get more news on what the government's shutdown is going to be, because we need that data from the government to help the Federal Reserve decide what they're going to do, because that is a pivotal point of where we're going forward from here, folks. So right now, what my expectations are is the markets are going to be stabilized right through here. We're going to be at 6.25 to 6.5 until there's one catalyst that either pushes us way over or down below. And that's going to be mainly what we're looking at with inflation. And I don't think the jobs report is going to surprise us anytime soon on the uptick. So we're going to look at inflation on this, and the jobs market is deteriorating. So if you want to find out or read more about all that, just go to our blogs each day, hit resources, hit blogs, and you're going to find a whole bunch of information there you can use. So thanks for watching, folks. God bless. Hopefully you learned something today about being your own economist and taking today's news, even the little bit of news we have, and trying to figure out what that's going to do for the markets, especially these, because you're here to figure out what's going on with these and the whys behind it, folks. So thanks for watching. God bless. Have a fantastic morning. I'll be back later this afternoon with a live event. We will not be talking about Stock Talk Tuesday. Yeah, we're going to be talking about home prices. Is there going to be a crash in 2026? You might want to check out today's live event. You might be a little bit surprised with my answer. Thanks for watching, folks. I'll see you live today or at the closing bell later today to let you know how this mess ends for the day. Thanks for watching. Bye-bye.